Did you know one of the world's biggest banks here in America just stopped lending for 7 days? This bank also was recently found guilty of committing all sorts of money laundering schemes. And so this doesn't sit good with banking in general and ultimately the economy. TD Bank is the bank that is guilty of this as of right now. You heard it here first. And this is just not good for the mortgage industry. Monday, yesterday, the 21st of October, we also saw mortgage rates spike dramatically, and we're getting much closer to a 7% than a 6% that we were at just several weeks ago. The reality is here, mortgage rates are likely going to be volatile all the way through the election, and even probably a little bit further into that, and we don't really know what's going to happen in the next Fed meeting. However, the market is definitely softening up a little bit. The rental market, as we've discussed, is softening up a little bit. And listen, if you're a buyer, it's a good time to get out and purchase. I know we say that all the time, but the reality is if you have a house and you are searching for a house right now and you're a buyer and you can afford the payments, you should take a shot and not worry about any of this stuff, because we've seen mortgage rates continue to be super volatile, taking buyers in and out of the market. And we're now at almost a 4 or 5 month high of interest rates, highest it's been in a while, trading somewhere around 6.8%. Again, huge spike yesterday. Quite frankly, a little bit without any real reason, just bad day for rates. They had a case of the Mondays, I guess, right? So listen, over the next several weeks, again, I expect a lot of volatility here when it comes to mortgage rates. So that's just a quick rate update for you. Buyers and sellers, listen, we were out with a lot of buyers this past weekend, writing offers on property, multiple offers on properties. So again, there's still a lot of activity out there as inventory still sits above 10,000 homes for sale here in Massachusetts. This is definitely higher than it's been in some time. It's been sitting around this number for a while, and I do expect that over the next several weeks, that number to tick down as sellers pull their homes off the market as we get closer to the holidays. As we, during the holiday months, it's a tough time to sell if you're a seller. You don't want a lot of people treading into your house. So there's a couple properties that we'll probably pull off and wait till the spring market when it's a little bit stronger. And so we do see that inventory start to normalize a little bit here in the fall and winter months. But listen, sometimes that means it's a really good opportunity to purchase, because the people who are still on the market really need and want to sell. They want to move. And so they're very serious sellers, not these wishy-washy sellers that are pricing their homes at the top of the market. By the way, if you're a seller, the buyers who are searching during the holiday months are very serious buyers. They also want to move, often before the new year, right? So whether you're an investor trying to purchase before and get a new cost segregation before the year is up, there's still some good deals out there right now. So again, I know it seems like a lot of the times we say the market's great if you're a buyer or a seller. Trying to time the market is a tricky move. What I can tell you is, in general, the market is picking up a little bit despite rates going the other way. We'll see if that sticks with it here in the next several weeks as rates continue to yo-yo like they've been. Sometimes there's like a lagging effect there. So rates were down, buyers come back, people list their homes, there's a lot of activity, but then quickly we've seen buyers' pre-approvals drop off in $30,000, $40,000, $50,000 mark because of the volatility of mortgage rates. So if you were in the market just a month ago and you haven't purchased yet, you've lost a lot of buying power. So again, what does that mean if you're a buyer? Serious buyers are out right now. I do think you can save some cash on a purchase right now. You can get your offer accepted with some contingencies right now. Again, it really depends on the product you're purchasing. We just won and lost out on some offers this past weekend. Clean offers, one with inspections, with financing, and ones without. So, and again, if you're a seller, just know that the buyers are also super serious right now. We do see that the election year also, especially election volatility, just now, 14 days away from a critical swing in our economy and in our country. We see this Q3 and Q4 of an election year be a slower one where we see less real estate transactions. So I'm not shocked that inventory is still on the rise. Again, expecting that to start to come down as people pull their homes off the market. But statistically speaking, in a 4-year span, the last couple of election years, the year right after that, we see be one of the hottest real estate markets with some of the most transactions possible. So that means we're looking for a very active 2025 Q1 and Q2. and I expect that inventory to get gobbled up. And again, rates will continue to take the stairs down and normalize eventually, especially after the election. So that's just a quick update for you. If you have any questions, shoot us a comment or a DM below.